Hi and welcome to this week's video analysis. It's the week 2nd of June 2019. We're going to look at all the FX majors, dollar index, basically break down all our bespoke support and resistance levels, chart formations that we're seeing, basically what we're expecting going into this week. Last week was quite volatile. We have seen a bit of a turnaround in the dollar index, seen a big sell-off in stocks. Is that likely to continue? We're looking at our yen crosses. We can't see any reason for that sell-off to halt as yet. So let's have a look at the charts and see what we can see. The first chart that we're going to look at is the dollar index. Here I'm just going to highlight the monthly chart. We're in a very large bullish channel formation. We have seen some capping in price action last week. We've actually got a cloud top at 98.40 and we made a high trade of 98.37 this month. If we go to a shorter time frame, let's go to the weekly chart. Here we can see bearish Elliott wave count to the downside. We've had that mixed, very volatile trading now for, let's have a look, for the last 41 weeks. Spikes or levels above the 61.8% Fibonacci are finding some selling interest. Looks like a wedge formation, a break of 96.60. And the measured move target is down here around about 94, the figure. If we go even shorter, and this is basically what we're looking at for this week. Bearish outside day posted on the 23rd of May. That often highlights the end of a bullish trend and the start of a downward bias. We're still holding inside this wedge formation. We've got trendline support at 97.48. We've got some bespoke support at 97.35. However, we do think we're going to get an impulsive breakout. Interesting that the 161.8% Fibonacci extension level is close to that previous swing low. So what was support should now act relatively solid support going into next week. So probably a break to the downside, small correction higher, and then a move down, a more aggressive move down towards the 261.8% extension level. That's at 96.21. We've got some bespoke support at 95.92, and then we've got the wedge breakout at 95.74. So basically we're going to be looking at selling into dollar rallies next week, looking for the impulse breakout, and then obviously target area is this band down here. So how is that going to reflect onto the FX majors? Well, again, let's just look at some different time frames. Monthly chart, opposite obviously to the dollar index. We're in a bearish channel formation, levels close to the 61.8% Fibby at 112.13 have held. Basically, we haven't really seen an aggressive move to the upside as yet. If we go to the weekly chart, ending wedge pattern, break to the downside. The 61.8% Fibonacci level is located at 111.80. We've had about 6 weeks of consolidation around that area. If we go to the daily chart, looks like a wedge formation. We posted a bullish outside day on the 23rd of May, basically the opposite of when we saw that outside day on the dollar index. That often indicates the bottom of a trend and the start of a new upward bias. So we are looking for a move to the upside. This is really our target zone for euro dollar. 114.48 is this inside wedge target. Let's just move that up a bit. 114 excuse me, 38 is bespoke resistance. So we are looking for a move, quite an aggressive move to the upside. This is pretty solid resistance here. We could then see a corrective move down, maybe a bullish reverse head and shoulders formation. So this would be a left shoulder. This would form the neckline and then come down in the right shoulder. I mean, that's probably trying to predict too far into the future, but our immediate bias is bullish in euro dollar. We need to see a break of that trendline resistance at 112.01 going into this week. Now, cable monthly chart posted a bullish candle after a perfected 9 count. That's a DMARC indicator. We have seen quite an aggressive move to the downside. that as long as that bullish outside candle holds, then really the long to medium term play should be still to buy into dips in sterling dollar. If we look at the daily chart, we have posted a bullish outside day. It's a Fibonacci confluence area, so we've got a 78.6% pullback level here. We've got a 161.8% Fibonacci extension level at 125.51. Just have a look at my notes. To the upside next week, this is really the prime area. We've got, let's get rid of that for a second. We've got 127.90 as a reverse trendline resistance. We've got an intraday 261.8% Fibonacci extension level, and I'll show you here. So basically, if this is the start of wave one at 127.84, we've got some support going into next week at 126.05. So if we do see a dip early on Monday, then we believe that's probably offering a buying opportunity for a ride higher towards that reverse trendline resistance around about 127.84, and potentially, and we can't tell yet, a 261.8% Fibonacci extension level. Dollar Swiss, and this has been a really interesting pair. We've got quite a few confluence areas here, so basically areas where we've got either support, Fibonacci, bespoke, or trendline. And basically, if we look to this chart, we've got a bearish outside candle. Again, we like these bearish outside candles, posted very close to the high. That often indicates that the bullish trend has come to an end, and we're starting this a new downward bias. We have seen now 5 weeks of negative price action. All of last week's initial rally got sold into. 99.45 is the trend of higher highs. If we go here, okay, 261.8%, 99.45, so pretty close to that trend line support. We've got some cloud support at 99.75, and then we've got bespoke support at 99.33. So these areas, or this area here, is basically the initial target area for dollar Swiss. An obvious place to get short before we reach that level, well, if we get a bounce before we see that area, would be close to 100.45. That's a Marabuzo level from Friday's price action. That's the midpoint from the open and the close of that aggressive sell-off. It's also close to a previous swing low. So basically what was support now becomes resistance. So at least at the beginning of the next week, we're going to be looking at selling into rallies, but obviously wary of this support area down here. Dollar yen, and again, I'm only going to sort of show one time frame here. This is the daily chart. Looks to have completed a 5-wave bullish Elliott wave count to the downside. This move lower is very aggressive now. An ABCD formation target is at 107.36. We've got the 61.8% Fibonacci pullback level at 107.60. Again, if we get a bounce at the beginning of next week, Marabuzo levels coming in around about 109 the figure, and that's very close to that previous swing low that we saw back on the 13th of May. So again, looking at selling into rallies if we get any. Stock indices are looking like they're breaking out of head and shoulders patterns to the downside, and that should offer quite an aggressive sell-off in stocks. So we don't really know whether we're going to get a decent bounce in yen crosses. Dollar CAD, let's just go back a bit. Let's go all the way out to this time frame. Okay, bearish outside week. Again, we like those outside candles. We've posted a DMARC 13 count on the weekly chart. That often highlights that the trend is coming to an end. If we go to this time frame, okay, we've managed to catch one pretty close to the top, or an intraday trade idea pretty close to the top last week, 135.53. 135.67 was the wedge top, or wedge trendline resistance. Got this 78.6% Fibonacci level at 135.37. Now, How aggressive is this sell-off going to be? I don't think it's going to be that aggressive. We've got trendline support coming in around about 134.25, but what I've highlighted here is potentially a diamond formation, so we could see some more prolonged consolidation in dollar CAD. We've had 27 days now where we've really seen little in the way of net movement. There's been spikes in both directions. Oil is having quite an aggressive sell-off at the moment. Next week we've got some support at 134 the figure, which is sort of around about where this range was before, or the base of this range. And if we look back here, this was resistance in April. It then became support in May. 134 is bespoke support. And if we go to this intraday chart that I was talking about, the 261.8% Fibonacci extension level is at 134.15. Now, commodity currencies have a tendency to overextend that 261.8% level, sometimes all the way to 423.6%, but I think that's going to be the focus for this week. We haven't broken a new low, so again, thinking about sterling dollar, thinking about euro dollar, thinking about dollar Swiss, there is scope for maybe just a mild correction in the dollar to offer selling opportunities early on next week. So again, we'll be looking at selling into rallies. I suppose 135.40 area. It's going to be close to a 61.8% Fibonacci. It's also a previous resistance area. So again, looking at selling into rallies in dollar CAD at the beginning of next week for a move down towards 134.15 and 134 the figure. Now Aussie dollar, I don't think we're going to see much movement in this currency pair next week. Probably going to rally now that I've said that. The daily chart, we've got this mixed volatile trading to the downside. All these waves can be seen in three waves, so 1 2 3 1 2 3 1 2 3, and that's often an indication that the whole move lower is corrective. We have seen stalling close to the 78.6% Fibonacci level. That's at 68.62. We've posted a bullish outside day on the 23rd of May, but we've really seen little in the way of some follow-through selling. Long term, and we're talking sort of weeks and months, not intraday. The long-term target for Aussie dollar is around about 72.65, but the short term, and an area I'm going to be wary of next week, we look to have broken out of a flag formation to the upside. We've got a flag target coming in at 69.70. We've got a bespoke resistance level at 69.68, and then we've got a 161.8% extension level at 69.77. So this area, I think, is the immediate bias is to the upside. I mean, this area is going to be quite solid resistance going into next week. Euro sterling. Okay, 5-wave count to the upside. Let's just pull the chart in a bit. 1 2 3 4 5. Potentially in a very complicated AB CD formation to the downside. We broke the wedge. That would normally have a measured move target around about 82.80, but we look like we're posting a bullish outside month, or we have posted a bullish outside month, sorry, in euro sterling. Like we previously said, we do like these candle formations. We have got reverse trendline resistance from that wedge breakout coming in at 88.88 at the moment, so we are wary of upside pressure. If we go to this chart, and this is sort of our favoured time frame, if you like, for euro sterling next week, aggressive move to the upside. So wave 1, wave 2, potentially wave 3, up to 161.8%. We've seen an inverted hammer formation posted on the daily chart, often indicates the top of a trend. So we are looking for a corrective move to the downside. Prime support this week is at 87.60, and that's in between the 23.6 and percent Fibonacci levels. So quite a prime area, I believe, for trying to get long again in euro sterling. Euro yen, very complicated chart. The weekly chart highlights two different formations. This is an expanding wedge formation, has a bias to break to the downside. Got close to a retest of the trendline resistance after bouncing from a 61.8% Fibonacci level. It's moved to the upside. It's now showing an aggressive move to the downside, and this looks like another expanding wedge formation. So we have this one, which is bearish and wants to drive this currency pair lower. We've got this one, which is bullish and potentially could drive this currency pair higher. As you can see, there's plenty of scope for a move in either direction, really, in euro yen. And here we're just trying to get a clue with some Fibonacci levels. We've surpassed or broken through the 161.8% fib extension at 121.27. We've got a 78.6% Fibonacci pullback level at 120.68. At the moment, it looks like no clear indication. We did have a signal to buy it on Friday. It did hold for a while, but then it broke to the downside. At the moment, we're going to have to be selling into rallies really next week. This is a prime area at the beginning of next week. Previous swing high, close to a Marubozo level, around about 121.50. But I have to say that signals in euro yen are definitely far from strong going into next week. Okay, I hope you've enjoyed that analysis for this week. We'll be back again soon with some more analysis. Please feel free to visit our insights page on the website to get some intraday bespoke reports. Okay, many thanks, and we'll speak to you again soon.